Okay, when it comes to trade exits, now this is very important because a lot of people think that entry is the most important thing in trading. Meaning that people think that where I buy and where I sell is more important than where I take my profit, than where I cut my losses. Now, personally, what I find is that the entry part is the easy part. The exit part is the harder part. The exit is the challenge because anybody can just buy and sell, but then not everybody can determine where is the optimum place to exit or cut their losses. So the first type of exit is very important. It's the stop loss. So what does the stop loss do? It helps you liquidate your open position at a predetermined price. To put it simply for you, when you set a stop loss on your trading platform, you are telling the trading platform to help you cut your losses at this particular point so that I wouldn't blow my whole entire account. Okay, you're telling the trading platform, help me to get out at this price if my trade did not work out. And here's one very common mistake that a lot of beginners make, is that they don't set a stop loss at all. And also there are beginners who set their stop loss already, and once their hard-earned money is on the line, they start to manually adjust their stop loss. Now this is because of their trading psychology, which I'm going to cover on a little bit later on. But to start off first, make sure you trade with a stop loss, because it is so much better to take a small loss as compared to getting 99% win rate and having one loss to wipe out your whole entire account. When I talk more on trading psychology, you understand what it means. Okay, so let's move on. What does it mean by a take profit? Now, the take profit, or some people call it the target price, it helps you close your position at a predetermined profit target. Meaning that you're telling your platform, please help me close my trade if my trade is in a profit up to this level. Okay, meaning help me confirm my profits when the price reaches this level. Now, where you set your target price or take profit is also very important, because sometimes when you set your target price too wide, sometimes the price might not have the momentum to reach your target price and it will retrace. And that might be really frustrating for a lot of people, because I've experienced that before also. But when you set it too tight, you also take the risk of having your profits too small and allow it to be not so significant. So you want to find an optimal target price level. Same with stop loss. If you set your stop loss too tight, because the market doesn't move straight in one direction, it has random fluctuations, and you need room in your stop loss for the market to breathe, for the market to have that temporary fluctuation. But when you set it too wide, you take the risk of having a very, very large loss in your account. So you also want to find an optimal level where it is not too tight and not too wide. Otherwise, you get stopped out very, very often. And the other way to exit your trade is by manually closing your trade. So manual closing allows you to close your position at the current market price. Now, a common mistake that a lot of beginners make is that when they make a buy, let's say in euro dollar, when they want to close the trade manually, they go and make a sell. So instead of making a sell to close your trade, you are actually opening a sell trade. Alright, so never ever do that. Same thing for when you make a sell trade. You don't close the trade by pressing the buy trade. Alright, later on I might show you how to close the trade properly in the MT4 platform. And the other type of exit is the trailing stop loss. Now, what is a trailing stop loss? It's a stop loss order that moves along with your current market price. Meaning that, let's say you execute your trade right here, you set your stop loss right here. And as the price moves along and go bullish, your stop loss would also automatically go to the level that you want it to be. Can be 20 pips, 30 pips. But this gap would always be the level amount of pips that you set it to be. Alright, so when it comes to your MT4 platform, same thing, go to new order, you'll find this window right here. To set your stop loss, you will need to key in your stop loss level right here. Then your take profit, you need to key in your TP level right here. And in order for you to close the trade, you need to press this button right here. Okay, right now it's not shown because it is weekends time. But when you have an open trade, you will see this button being shown to you. Alright? But never ever go and close the trade by pressing on any of these buttons. Because when you press these two buttons to buy market, sell by market, you're actually opening a new trade. If you want to close the trade, you need to press the button that is at the bottom. Alright? Same thing if you are using your mobile platform. You never press buy or sell to close the trade for Forex. Okay, for Forex. So let's say today you're trading euro dollar. You're executing a buy today. Your stop loss would be set at the bottom. Then your target price would be set at the top. Alright, so when you set these two exit points, make sure you have a very good risk to reward ratio. Okay, this one I'm going to cover more in the next few lectures. But never ever have a stop loss that is wider than your target profit level. Because a lot of beginners, what they do is that they set their take profit really narrow, but then your stop loss is really wide. Okay, never ever do that, because although you might get a lot of profitable trades, but then it only takes you 1 or 2 loss to wipe out your previous 80 or 90 winning trades. But for the institutional traders, they would have their target profit level a lot wider as compared to their stop loss level. Alright, they would have a risk to reward ratio of, let's say, 1:2, 1:3. But never have it the other way around, 2:1, 3:1. Alright. So for your trailing stop loss, as the price goes bullish, alright, instead of being static, your trailing stop loss actually would be adjusted to your break-even level. And here's the good thing about it. In the event that the price retraces back down, the stop loss would not go back to its original level. It wouldn't go back right here. So this means that your trade would either be closed at a break-even level or at a profit level. Now this method is very commonly used for trend followers. If you're a trend follower, then you can consider using a trailing stop loss. Whereas for day traders, scalpers, it's not that suitable because the price wouldn't move as much within that short time frame. Alright, so I would recommend only use trailing stop loss when you're holding it for the long term.